The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the February 27th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. No better way to do it than by taking a look at our empowering beliefs, the ones I call become your own electrician, the electrician of your beliefs, folks, because I believe if you can actually take in all that I say here, it is the true secrets. It is the two secrets behind what it is that empowers us. And that's the beliefs, because beliefs, they've got the power to create and certainly the power to destroy, and only you and I, we are the ones that have the incredible, extraordinary, awesome ability to take any experience of our lives and create a meaning that either disempowers us or one that can literally change our lives, save our lives, empower us to places we never even dreamed of. Think about it, folks. What an incredible opportunity that we have. That means everything that happens to us, we have one of two choices. It's an either or. It's either going to find a way to make it positive or negative. I shared with you yesterday the easy way to turn any negative thing and make it positive. And that's just simply by the question that you use. And the question is, what good can I find from this situation? It's not how, it's what. What good can I find from this situation? Because you and I were the only ones that control the meaning that we give to something. It's truly the beauty of the markets we trade here. You've got to totally get that whole concept because you've got bulls and you've got bears. I could be a bull, you could be a bear out there. All we're going to do is trade what we see. We're going to trade our beliefs. That's really what it's all about. And that's the beauty. See, the beliefs that we give to events, to statements, to criticisms, to patterns, you name it, we are the ones in control of that meaning. And that is really pretty cool when you decide to finally take responsibility for it. Because what we can or cannot do, what we consider possible or impossible, and of course impossible just really means it's just simply untried, it's rarely a function of our true capabilities. It's more likely a function of our beliefs about who we are. And that matters because each of us are looking for breakthroughs. It doesn't matter where you're at in life. You're always looking for a breakthrough, and a breakthrough begins with a change of beliefs. And the way to do that, the most effective way to do that, is to take the disempowering belief. We've all got them. Take, just go through your entire belief system and start with the weakest link out there. And what you've got to do is you've got to associate massive pain from what it has stopped you from doing, becoming, whatever it might be, all that pain in your past. How about all the pain that it's going to cause you today if you continue on with that belief? And how about all the pain in the future? That is what's called the Charles Dickens process. That's the best thing you can take from that movie, in my opinion, out there. And that's because knowing what you don't want is really key to the whole situation. Because you want to get rid of what it is you don't want, and you must immediately replace that with what you do want. So knowing both is important. And what we must know is this. At any moment, and it boils down to this, a decision that we make can and will change the course of our life forever. Could be the next person you stand behind in line. Could be the next person you sit next to on an airplane. The next phone call you make. How about the next phone call you take? Could be the next movie you see, the book you read, the newsletter you subscribe to. It could be any one of those things that just simply opens all of the floodgates. And then all of the things you've been waiting for just simply will fall into place out there. Folks, get that entire set out there and teach that to your kids, and life will be good. Let's go see what's good inside the marketplace out here. Kind of a flat market. That means the Dow is trading down 29 points, trading out at 16,169. S&P off 2.5 points. They're trading at 1842. NASDAQ flat out here, trading out at 42.91. Russell 2000 off a couple points, trading at 1178. NASDAQ 100 to the upside here, so we've got some green across the Well, not across the board. In one of the indexes here, New York Stock Exchange, that's off 17 points. No big deal out there. Goldilocks is green. It's up $4 and change. Trading at $13.32. Silver is flat, trading at $21.24. Light sweet crude off 45 cents. Trading out at $102.13. Our calling number is 877 927-6648. Give us a call, folks. We'd be happy to hear from you. Take a look at your stock chart. Answer any question I can. We'll see if Janet Yellen can move these markets out here, because certainly Stevie's son can't, and doesn't look like anybody else can. If we start off by taking a look at the New York Stock Exchange, it's what I'd like to do. And so, therefore, we're going to go ahead and do it. We're taking a look at the weekly chart now. The week doesn't come to an end. The month doesn't come to an end until tomorrow. But we might as well try to get a little feel for what it is that we're looking at. Now, inside the New York Stock Exchange, it did try to take out the highs from 2007. Failed to do it last week, and this is important. So we always like to pull these up on the screen out here. We had a little doji candle out there. Doji candles are important at their resistance levels, so we got that. Hey, if you were to see close lower meaning below 10,308.79, you're 10,327 right now. Boy, the leaves would be falling off of the tree. Of course, right now what's forming here, if the candle were to end this week, you'd have another doji candle, but in this case here, it would be a shooting star type of a doji candle out there. Another reversal type signal up at resistance. What that says at this stage of the game is that the New York Stock Exchange, which has a 6,000 point consolidation it's trying to break out of, it's struggling to do so, and I may have to wait another day out there. Of course, that's what the weekly chart is saying. Maybe there's going to be a lot of movement between now and 4 o'clock tomorrow. If we take a look at, so then let's go take a look at the monthly chart. What's the monthly chart here showing for us inside of the New York Stock Exchange? Well, the monthly chart gave us a bearish reversal signal last month. If we take a look, in fact, we're looking at the 2007 high. That's what I'm going to take a look at first here for you, just so you can kind of get a feel for it. When the 2007 high, what's really interesting here, if you take a look at the actual day, October 7th or 17th, I can't recall which one. We'll change over to daily chart out there. You're going to see one heck of a wide price spread day out there, 190 points or something like that inside of the New York Stock Exchange. So it was a big day to the upside that would have had people partying and celebrating. Of course, what it was really doing was it was making a high. Now, on the monthly chart out here, what happened in 2007, nice big bearish engulfing candle that took place out here during the month of November 2007. Get follow through the next month. That's really what you want to see on any kind of pattern that you trade out there. You want to see confirmation, and guess how soon you want to see confirmation? Like the very next thing, like the very next candle, no matter what time frame it is you trade on. Because if you don't get that confirmation, you're like, oh man, what are you doing out here? Well, in the case of the New York Stock Exchange, you had that bear sash, bearish engulfing, really a bear sash candle here from last month. But take a look at this month. You've totally erased it. In order for that bear sash candle to even have any kind of relevance, quite frankly, what needs to be seen is a close below 10,173.77 out there. You're at 10,329. So there's going to have to be a big move to the downside here between now and 4 o'clock tomorrow. Not that that can't happen, but that's what you want to be paying attention to, because the bulls have been able to fight off all of the bearish conditions from last month, and that is on the New York Stock Exchange. Now, what they haven't done, what hasn't occurred out here, is a close above that high of 10,387.17 during the month of October out here. We have seen that area get breached, and look, closing, quite frankly, at 10,390 would not exactly be something to write home about out here. So it needs to be a convincing close above that level out here. But at this stage, on a monthly chart, the bears have been fended off big time out here. That's what's going on the wider swath, the wider breadth of the marketplace out here, the New York Stock Exchange. Now, look, if it breaks out above this level, you're talking about a major consolidation pattern that has formed out here, and that would be 6,000. You're talking about coming down from the lows of 2009, because you went from 2007 at the highs down to the lows. Those lows were coming into lows that were established back in 2003 as well. And you got one heck of a nice, big, huge potential breakout inside of the New York Stock Exchange. Now, of course, what we do know, for all of you that did download Stevie's special report out there, and thank you to the hundreds and hundreds and hundreds and hundreds and hundreds and more hundreds, actually, that downloaded that special report. If you haven't done that, folks, go over to the homepage of TFNN.com. Don't be left out here. You want to download the special report. You want to have access to it. You want to be able to refer back to it out here. Of course, you know that one of the things that Stevie's son saw was that price relative strength divergent pattern that existed inside of the New York Stock Exchange on a weekly basis out here. Yeah, look, we still have it. Even the one that took place that I was alerted to really on this trading session right here, January 24th, that was the dead giveaway that this was now a very important top, the potential top that is out here, and until those highs get taken out, this reversal pattern is still in place. Well, even with making just a slighter higher high this month here, right now you can see the shooting star on the weekly basis here that is formed. But of course, the week is not over. Now, the key on any move back in the market, any pullback, is going to be that trading session from February 17th. That's going to be that hammer candle out here. If that gets taken out, it is sayonara, baby. You'll see price move to quite a bit the lower levels out here. That's important area for the New York Stock Exchange to hold. That price point, by the way, is a 97.3247. So the bearish pattern that's in place, that was in place at all of the significant highs. Now, that's the importance about this, folks, is that if that gets taken out, old resistance should become new support out here. So that's what's going on inside of the New York Stock Exchange. Let's go take a look at other strength in the marketplace. Let's go continue using the Rhodes Momentum Indicator trading platform to take a look at it. Well, let me take a look at the S&P 500. Let's do that. Let's look at the S&P 500, see what we've got out here right now. Today, that is trading out at 18,000. How about that? 1842.98. It's off a couple of points. No big deal. Here is the weekly chart. This, too, has the price relative strength divergent pattern out here. And if we get a close above this level here, which is 1850.84, that pattern will have abated itself out there, and at least the negative meaning that it has contained within it. And on a weekly chart, a little shooting star right now, but not a big deal. Let's take a look at the daily chart out here. So we've got going on inside the daily chart. We're going to see nothing but a number of just simply sideways moves. Yesterday's candle being a high wave candle. High wave just not a reversal signal at all whatsoever. It just simply means that the market has lost its way. And the market, as you know, has lost its way, traveling up at these highs out here. If we take a look at let's go back, take a look at the composite. We'll start up here at the top. Composite just traveling and just consolidating up at the highs. No reversal signals here whatsoever. There was a bear sash candle that you are trading above right now that says that could be support. Support, let me pull this back here, is from the February 19th time frame. The high of that candle, by the way, 42.74.29 out there. You're at 42.88.67. Now, the daily charts, composites showing no bearish signs whatsoever. Right now, Dow's off 16, S&P is down 2. We'll be right back, folks.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a license to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 14 out here. Have a question in our Tiger's Den. Folks, if you haven't had a chance to join the Tiger's Den and test it out, number one, you get to see everybody's charts in HD. So that is a beauty. Plus, the reality is in life, you know how this works here because you've done it many times in your past. Whenever you're trying to step up your game, it's all about the folks that you surround yourself with. And here is no better place, your peer group. There's no better peer group out there when it comes to trading and investing. You got a group of folks that are just simply trying to help you from all fronts out there. Great trading ideas. So just go over to the homepage at TFNN.com. So many things to do out there. Number one, you can download my special report, Major Market Tops and Bottoms. Number two, for $1, Mortimer, you can sign up for the webinar, the workshop that Tom and David White are going to do. Plus, you're going to have access to a great charting package out there. So you want to go ahead and do that. And as well, go ahead and sign up for the Tiger's Den out there. There's just nothing better to do. Now, I had a request inside of our Tiger's Den to take a look at King Kong, really just Kong. Kong Zong is the name. K-O-N-G happens to be the ticker symbol there. I believe they're a digital entertainment company in the People's Republic of China. Now, one of our Tigers here had picked out the high-volume high bar out here. That's a beauty. That's the daily chart we're looking at, September the 6th, the low of which is 1177, and that is where price is now making a beeline to, and it may even get all the way up to the high, 1492 out here. Now, Kong right now today is taking out a couple of different, well, it took out yesterday just slightly. This what this does have is a couple of nasty days out here to the downside, and that's October 28th. That's what it's dealing with right now. Doesn't appear to be much of a problem. It's up and over that on lighter volume. A little dangerous. had 1.3 million shares to the upside. It is taking on a swing point that has volume of only 768,000 shares. And yesterday, you came into it with only 400,000 shares. Not necessarily the best of scenes out here, but buyers are in control at the moment. And so my suggestion is just simply to use a trailing stop on this equity here and let the market go ahead and take you out. I would also have my exit strategy, as I do on both sides of the trade, on everything it is that I trade. The beauty there, folks, is that, it's like Ron Popeil. You set it and you forget it. That just means you keep coming back and you make adjustments as you need to out there. But you want to, you want to have your exit strategy. That means where is your target when you enter a trade? If you don't have a target when you enter a trade, then don't trade, because you should be able to identify the target. I don't care what system you use, what tools you use. Look, if you don't understand A to B equals CD patterns, no problem. You don't have to in order to come up with a target. If you don't use retracement levels, hey, no problem. You don't have to in order to come up with a target. I'll give you the easiest target of all on any chart that you look at when you enter a trade, long or short. Just go take a look at the next swing point, because that next swing point should be your target. That's where the price moves to make a 100% move of a move out there. Quite frankly, in the case of Kong, if we take a look at it here, you could almost say that this thing has a sideways consolidation pattern out here. That sideways consolidation pattern right now is what it's really trying to take out. I would draw that as probably the consolidation look, something like that. And if we take a look at that consolidation, a consolidation pattern that is broken to the upside or to the downside is typically going to make a move equal to or greater than the actual consolidation box. If we take a look at that, I'm just drawing this in here visually for you. So now that we see that Kong is breaking that consolidation pattern, where does it take us to? About the 12.59 level. Now, if you were one to use retracement numbers, if you went from that high volume high, which is $14.92, all the way down to the low out here on December 31st at $7.02, you'll see at 1190 you got your 0.618 retracement. That's the bottom of that high volume bar out there. 1323 is your 0.618. So I'm going to have to say anywhere between 1190 to 1260 to 1320, and volume probably gives you an idea out here. Just adjust your stop and let the market take you out of this trade out here. But nice trade for our Tiger, or it could have been Tigress. I really didn't pay attention to who had posted the request out there inside of the den. Nice trade. If I put up the Rhodes momentum indicator signals here for the same chart, let's do that. We'll take a look at the weekly and daily time frame. I think I've got, there we go, Kong. What we will see is that this week here, Kong actually giving a nice bullish buy signal inside. What you really want to see here this week is a close above this trading session right here. That's a trading session from 1/10/2014. What you'd like to see is a close above $10.26 as a confirmation of a weekly buy mode. You are trading at $10.26 right now. So, again, the number to be paying attention to, 10.26. On the daily chart out here, give me a moment here. Looks like you got the golden cross going on for you as well. You got the 50-day moving above the 200-day exponential moving average. That's always bullish. 877-927-6648. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, all you wonderful folks out here. Dow is down 7 points right now. S&P off 42 cents. Russell 2000 down $2.60. Had a email request from a listener who is in a long trade in the Russell 2000 and the IWM, asking me for, hey, what's going on inside the Russell 2000? So thanks. Keep those cards and letters coming. Let's go take a look at the Russell 2000. Let's look at it on the weekly and the daily chart first. Let's use the Rhodes Momentum Indicator signals to give us an idea as to what's going on. Now, the top part of the chart here happens to be the weekly time frame. The bottom portion of the chart, bottom half of the chart, is the daily time frame. Always nice to be able to have them both up on the screen to really get an idea as to what's going on. We can also look at shorter term time frames as well. As we take a look at the weekly time frame here, you'll notice a big old bearish engulfing candle formed the week of January 27th out there. That says that you would then have resistance at its highs. So what you want to do if you are long the IWM is you want to see by the end of this week, because you're testing that level, 1182. Even Steven is the number. You're at 1180 right now. We have seen an intra-week spike so far. We've gotten up to the 1188.10 level out there. So if you clear the bearish engulfing high out here at this stage, that says at 1182, that old resistance should then become support. So that's what it's doing as we speak right now. If we take a look at the daily chart, you know, the Russell 2000 really stepped up its game here over the course of the last week or so. It was the weak link out here. It's made its way all the way back to the highs. Obviously, we're trading into the highs. If we take a look at the daily chart, that 1123 candle, is that where the 1182 came in? Where did 1182 come in as a price? Where did it come in? price out here. Give me a moment here, 1182. The swing point that it's trading into is 1177.76 from the prior week out here. That's a strange thing on my system. But right now, what I can see here is that the truly buying pressure with inside of the New York, inside of the Russell 2000 here. On a daily chart, your only reversal candle here recently was February 20th. Where we saw a little bear sash candle. You're above that. We've seen no reversal signals here whatsoever. Again, I would say use, just like in the trade on Kong, I would use a trailing stop here. And we'll go take a look at the, see if I can pull up my position size calculator and give you the average true range. Let's go take a look at the ETF structure out here. Let's take a look at the IWM to get a feel from a volume standpoint what we have going on. Now remember, volume, folks, only represents potentially, I say potentially, only 25% of the equation out there. So it's just only one indicator. It's not the only indicator. It's only one indicator. There are more indicators. There's momentum. There's velocity. So you want to make sure that you're using the proper set of tools in your toolbox in order to analyze what's going on inside of any stock, ETF, currency, anything that you trade out there. Now, as we take a look at the IWM, the other important aspect of the IWM, so for the individual that sent me the email, the beauty here about the IWM is that it came into its resistance level, which is the swing from January 22nd with volume yesterday. Not a little volume, big volume yesterday. The high of that candle session was 117.37. Only 24 million shares up there. And what we saw here was yesterday, 40 million shares were moving into it. You move into a swing point with volume, says you're going to be back up there. Well, guess what we've done here today? It's been back up there, and it's tested that high. Again, that high being the 117.37. You're at 117.30. You've been up to 117.46. Volume today is already 8.7 million shares, going into, again, 24 million shares. It's taking out a 3 drive to a top pattern, very bearish pattern. You take that out, guess what it says? It says, hey, this might turn into be very bullish out here. So these are the signals. We're up at these highs that we really want to be watching for a signal out here. And it's the IWM is coming in here nicely. So I would say being long and strong, just use some type of stop. What is that stop? Would use some type of average true range. Let me see if I can. I should have probably done this during a breakout here. Let me see if I can pull that up on my screen here. Give me a moment. And I pull down here, go to this, go to that, do this. There we go. Got the position size calculator. I'll go ahead and blow that up on the screen, folks. And this is one of the tools that comes with the Mastering Probability subscription. You can try that unconditional money-back guarantee, 30-day money-back guarantee with all kinds of education, access to me specifically about specific trades that you might be in, and any assistance that I can provide. Nice tool here. It's all about position size. And if I type in the IWM, which I've just done, $1.49 is your average true range. So if you want to use a trailing stop, a tight one, use $1.49. You can use it over yesterday's close. You can do it intraday with regard to the high. If you're going to do an intraday thing as the high, I would use $1.49 times probably 1.272. Just multiply that out for you. But on the average of over the course of the last 9 days, because of the holiday that we've had in here, the average movement with inside the IWM is $1.40. What did I say? $1.49. It's had as little as 71 cents. That was on February 21st, and it has had a move as high as $2.71. That's going to drop off the charts here. It looks like tonight, $2.71. So your average true range is actually going to narrow a bit when it comes to tomorrow's trading session is what it looks like. So that's how I would trade the IWM. So the IWM coming into its swing point with volume. The Qs, on the other hand, the Qs here just simply trading sideways, not doing a whole lot. The Qs yesterday had 42 million shares, taking on 31 million shares. The Qs were both pushing higher and lower. So pretty tough because it was able to exceed the swing point from February 24th out there, which was $90.82. I would have to say with price moving higher, it really was pushing higher with volume yesterday versus pushing lower with volume, and that is inside the Qs. I see we've got a little bit of movement here inside of Apple. It's up about $7 this morning. Why don't we switch over and take a look and see what's going on with some of our core holdings just to see what we've got going on there. You know, the likes of IBM, Amazon, Intel, IBM. Did I say IBM? I probably did. And Apple. So let's go take a look at Apple, see what it has done here. Now, coming off of the app, what Apple did was it got back to the gap down level that was caused on January 27th. The low there is 545.75. Did it with a little doji-ish type candle. Came in there with 9.3 million shares. So came in with light volume because you could use either 38 million or 20 million from the actual day of January 27th. It's moved lower. Let's see what kind of retracement that Apple has done thus far from the low, January 31st, to the high out here, the most recent high, February 18th. Boy, you talk about hitting the 0.618 retracement to the penny. I don't know if it hit to the penny. Let's find out. 515.57 would be the number. No, it missed it. Missed it by 3 cents out there. Can you believe that? How do you like that? So it's made the 0.618 retracement. Today you've got a bullish engulfing candle that has formed so far. So long as you see it close above 523.61, you're trading at 524.15. You'll have a bullish engulfing candle, and that says, hey, you know what? Maybe what Apple is doing here is forming an A to B equals CD to the upside out here. That A to B equals CD pattern, that could take you up to a price level of, on a one-to-one basis, all the way back up to the top of the consolidation pattern out here at 573.12. That would put some energy into the Qs for sure out here. So we'll see how that plays out. But that is on Apple. That's the pattern that's going on as we speak here right now. Let's take a look at some of the other equities with inside here. Let's take a look at Google. That's trading at 1122 out here. No reversal signs whatsoever inside of Google. So nothing negative to report there for sure. If we take a look at Amazon, if the market does crack to the downside here, here's a trade you want to be in. Very likely is a trade you want to be in. I mean, there could be some support out here down at the previous gap at October 24th level because of volume, 12 million shares. But, boy, if it can take out the February 5th level with more than 4 million shares, that's where we got a couple of competing patterns. But Amazon may be one that you would want to take a look at a short trade in. So far, Amazon just way weaker than the rest of the indexes out here, just on its bounce here. J.P. Morgan, let's go take a look at J.P. Morgan, see what it's doing. J.P. Morgan is also a little bit weak here. J.P. Morgan could be forming an A to B equals CD to the downside. Yesterday, the reason why I said is yesterday you had some volume moving to the downside out here. That A to B equals CD to the downside would look like this and take you down to about $53.13. Maybe 51.62 out there. That's on J.P. Morgan. ExxonMobil, let's go see what ExxonMobil is doing. Now, ExxonMobil here moving. It's still trading inside the upper part of its consolidation range out here. What it is struggling with is this open gap. Did not actually test it, but came fairly close to testing it. So this had gapped down, but, oops, didn't mean to use that. You meant to do this. There we go. So ExxonMobil gaps down 15 million shares after doing 11 million shares the day before on January 22nd. But ExxonMobil moved into that with 16 million shares. So it moved inside that swing point with volume. Now, not really a swing point. I take that back, but moved into the breakdown, the nervous breakdown session out here. Then lost the volume on February 25th. Yesterday, only 9 million shares, so it's not really pushing in any direction, higher or lower, with any kind of volume pattern out here. Let's go put up the Rhodes momentum indicators. Let's go see, because this takes into account several different facets. So let's take a look at the Rhodes momentum indicators for ExxonMobil. XOM is the ticker symbol. We'll take a look at the weekly as well as the daily chart. Try to get a feel for what this is telling us about buyers and sellers out here. So you can see for the week right now, if we were to close like this, it will have formed a doji candle out here on the weekly chart. It is trying to break into a bullish mode out here. Inside of the daily, the positives are, buyers are in control as we speak here right now. That's indicated by these red signals. It's up above the 50-day exponential moving average, which is probably about the 94.74-ish range out here. What we know that ExxonMobil needs to do, it needs to clear the gap down that we took a look at on the other chart that we were looking at just a moment ago. Let's go take a look at what else do we have inside of the inside of our core holdings. We got to look at Visa, right? Because Visa is the number one weighting structure inside of the Dow out here. And what is Visa doing? So Visa finding resistance, very similar to the ExxonMobil chart. Gap down here on January. Now the dates differ. January 24th, this thing gaps down. Volume not too bad, 4 million shares out here, but it's that gap that is acting as resistance. That's the red horizontal line going across my screen. That, by the way, is the low of 227.66, 3.4 and 4 million shares. That area has been hit with 3 million shares, so that's the same. Has been hit with 2.8 million shares. Lighter volume on February 25th. Yesterday, tested with 2.6 million shares. Just not enough to bust it up inside of Visa. If it does get some volume, it has wide price spread here, so it's got some pretty nice support out here. Visa could actually be setting up an A to B equals CD to the upside here. Your A point would be the 199.43. Let's draw this in on the chart for you. The B point being your 235.50 swing point high, and the C point being down here from February 4th. 1-to-1 A to B equals CD to the upside. If it can find some giddy-up juice, 247.48 would be the number, and that is on Visa, ticker symbol V. If we take a look at, what have I missed out here? Priceline. Let's take a look at Priceline. What is this, a weekly chart out here? Priceline is looking for new heights, and the number it wants to achieve is 1527.40 or so. It's trading right now at 13.55, and quite frankly, I could make a justification that 1527 is really not the next stop here for Priceline. Again, it's a weekly chart, so it's a longer-term time frame that we are looking at. Let's take a look at some stocks here, moving and grooving. Let's go take a look at what we've got moving the market, so to speak. Let's take a look at what we have going on to the upside. Let's take a look at Workday Inc. WDAY is the ticker symbol. That is not the leader in the clubhouse. You got Intercept Pharmaceuticals, ICPT. That's up $13, but you got Workday. That's trading up 9%, $9.43 out here. And, man, that's a nice-looking IPO chart, isn't it? This thing IPOs on October 12th. 45.05 is the low. 51.37 is the high out here. You're trading at 109. So in a period of, about 14, 15, 16 months out here, this thing has made a nice double at least, and it's gapping up. Here's the second gap, second sign of strength gap that we have seen. Inside, is this a gap right here? Let me see. I'm looking at January 6th, 85.37, the low, 85.71, 85. Yeah, you actually have an exhaustion gap that has formed now. Looks like an I'm exhausted. Looks like an exhaustion gap here inside of Workday. Somebody'd have to do the math on this. I'm not going to do that while I'm live on the show. What you need to see in order to have a exhaustion gap is the third gap needs to be larger, both in price and percentage. So how I would measure this would be the high of 98.74. Someone write that down. The low on today's session so far is 105.28. Yeah, you subtract the difference, you divide it I divide it by 100.70, and if that is a larger percentage than this gap right here that took place on November 25th to the 26th, because it looks like dollar-wise we've made it, then you would have an exhaustion gap on Workday. No trade just yet, but something to keep paying attention to. 877-927-6648, the very flat market. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 13 points, S&P up 1.5 right now. Again, nothing more than another sideways day out here. We'll see if, at least at this stage here, Janet Yellen has not been able to move the markets one way or the other. Now, we were talking. I was taking a look at Workday Inc. WDAY is the ticker symbol out here. So let's go. I want to go back to it because during the break here, I went ahead and did the math for you. And so there's a potential for a 3-gap play out here. So the first gap was $3.30. It was about a 4.39% move out here. That was the gap between November 25th and November 26th out here. There's a second gap, very, very small. Nonetheless, it qualifies as a gap, little breakaway out here. You can see how that level was even tested. It was a breakout with 2.7 million shares. It was tested with 1.7, and that's what made the next leg out here. So we've got that in play. This gap that took place today thus far, now the trading session is not over. If we don't see a piercing of the low out here, you'd have a $4.58 gap, so it's the largest of the three. You have a 4.5%. So just eking out the 4.39% move, so that qualifies as a third gap. What else do we have out here? Boy, we can apply all the different systems, all the different tools that each of the contributors here at TFNN share with you each and every day. A to B equals CD. You've done a 1 to 1.618. A to B equals CD out there. Oftentimes when you do that, you often are going to do something different, move sideways, pull back. Now with that potential island out there, that's what we want to be keeping an eye on. with regard to this equity. Not saying that that's what it's going to form. It just has the potential for us to go ahead and keep an eye on that. So you've completed that pattern. If you take a look at the Chapman wave out here, it is now in, that's D, E, I've got a number counter out here. Makes it real easy to apply to any chart. You now would be in what, D, E. You'd be in letter D, E, F. You'd be forming peak F out here. So getting very close to showing some type of top. Now, that's on the daily. Basil likes to look at things on a daily, a weekly, and a monthly chart. Well, if we go all the way back to the IPO date out here, I show that this thing here looks like it had what he refers to as an instant restart, because we saw a move above his high out here, which is took place the week of August 9th within 2 or 3 trading sessions. So that restarted. That was at Basil will have to tell me whether that was an instant restart or not. In any event, if it was, you are now in the weekly chart here. You're now in peak D out here inside of this equity. That's on the weekly. And let's come over and take a look at the monthly out here. And in the monthly, looks like you are in what would be called the fifth peak out here. So that is on workaday, and we will pay attention to that here. I'll try to keep that one on my screen, and we'll see whether or not that three-gap play comes to any fruition. We now need to see some kind of reversal before. And what's nice about this is actually on the daily chart, it's got some volume. This could easily come all the way back to the most recent sign of strength, which is down at about the 83.78 type dollar. So that makes a nice trade, and also it could come all the way back to this high volume bar at $55 or $59. But it needs to show some sign of weakness, and that we have not seen as of yet. As we I go into the last 30 seconds here. We take a look at the market breadth, and it's basically somewhat flat. 85 net advancing issues out here. New York Stock Exchange is up 4 points. Let's take a look at the VIX index. We have not done that here today. We take a look at the VIX. Is it above or below the 50-day exponential moving average? It's below. The 50-day exponential moving average being 1480. You're trading at 1430 as we speak here right now. So that bodes well for the bulls, and I can tell you that the market breadth inside the New York Stock Exchange has been very, very, very impressive out here. Folks, stay tuned. Basil Chapman is up next. I believe Larry is off today out at the doctors, and then we've got Daryl Martin, David White, the Andy Heck Show, and the Tom O'Brien Show from 4 to 6. Have a great Thursday, folks. Look forward to seeing you in the morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.